Ray, good of you to join us once again on CNBC. With all of this expectation being built into the market about the start of an easing cycle in the US come September, the US dollar has decided to just throw in the towel. Is there any risk that perhaps these expectations, at least for the speed and magnitude, could be upset a little bit and the US dollar will have a reprieve?
Well, certainly as we head, we're still over a month away from the September meeting, and the Fed has made very clear that data dependency is the watchword, which is why I don't think, we might get a hint from Jay Powell at Jackson Hole that a start of an easing cycle is more likely than not in September. I don't think we're going to get any clues as far as magnitude is concerned and the potential pace of future easing from there. But I think what's interesting is if you wind back to 24 hours after, 48 hours after the payrolls report, the US payrolls report at the beginning of August, markets were fully discounting a 50 basis point cut in September. Here we are, 3 weeks later, and markets are much better priced for 25 basis points, and yet the US dollar has already fallen below the lows that we saw in the immediate aftermath of the payrolls report. So, to our mind, it's not necessarily the pace and the magnitude of a Fed easing cycle, it's the mere fact that one is going to commence more likely than not in September. And we've been saying since the beginning of the year that our bearish dollar call is fully predicated on the timing of the start of a Fed easing cycle. And historically, that has prefaced, usually a prolonged US dollar weakening cycle. And I think we're in the very early stages of that here.